Hello everybody. So this is December 31st, 2025. I was hoping we'd get a rebound in many of the stocks I cover on the channel. Unfortunately, we might have to wait until early 2026 or maybe well into 2026. I have no idea short term where the market goes. But what this means, since we didn't get a rebound, what this means is we get to tax loss harvest. That's, I guess that's another prize that we get. Not as good as making gains, but we get to actually book losses and reduce our tax liability. Or if we don't have tax liability this year, we can carry forward the loss onto the next year when we actually have tax liability, when stocks eventually go up, and I mean hyper growth stocks. Of course, on this channel, I only talk about hyper growth stocks. I talk about highly volatile stocks. I'm talking 50% yearly volatility. Roughly is the stocks I cover on this channel, right? And we know volatility over the long run is going to be the return of the stock, roughly. Vol equals return, roughly, over the long run. Not a good end of year to take the snapshot at. It's as though the USA wanted less tax from stocks this year. Like, they didn't need the taxes. Actually, I think the US would have needed the taxes this year. But much of the pain, actually, in the stocks was self-inflicted, especially in the crypto stock. It was self-inflicted by the 10/10 liquidation that happened as a reaction to the President of the United States tweet on surprise China tariff in October. We kind of had a rehash of April, except that rehash was for small cap stocks. Essentially, that's what happened. We also had related pain with the government shutdown. We really had no luck this year. Related pain with the government shutdown, with a lot of issues in healthcare, a lot of issues with the subsidies, deal or no deal on subsidies. Well, management has said for OSCR that it doesn't matter to them. They're going to be good no matter what, but the market doesn't really believe that, right? GLP-1, we've had some issues. So anyways, we need to take the long view, even though it's tough to do, on December 31st, when you have a year like 2025, which was not a very good year, unlike 2024, which was an excellent year. 2024 was so good. 2025, not so good. And the rational, the wise thing to do is to take the long view and to take the loss. And keep in mind, I make this video December 31st because most brokers are going to book the loss today and report the loss today. Back in the day, it used to be recommended that you would tax loss harvest, maybe on December 29 or December 28. But nowadays, there's no issue tax loss harvesting the last day of the year. And the question is, of course, how do you do that without hurting the long-term prospect of a portfolio? Well, usually you do that by swapping correlated assets, by selling and buying a correlated, different but correlated asset, because that's the wash-sell rule. And of course, the wash-sell rule identifies the asset by the CUSIP number, right? This is like the 1970s. That hasn't changed. So it uses the CUSIP number. The idea is that you're going to sell one stock with one CUSIP, and you're going to buy another stock the same day, hopefully, with a different CUSIP, i.e. a different company in a different sector, right? You don't buy the same stock. Otherwise, if you were to buy the same stock, you're totally allowed to do that. But then you trigger the wash sale rule, which means that you don't get to book the loss. And so there's no point, right? You're totally allowed to sell MSTR and buy it right back a minute later. But if you do that, you don't have the wash sale. You have a wash sale rule, and you don't get a tax write-off. So the key is to sell an asset at a loss, and either wait for 30 days and then buy it back after that, or buy another asset and park your cash in another asset that is hopefully correlated. And this is what I'm sort of doing. So essentially, yeah, if you sell MSTR, you can't buy back or you have to wait 30 days. And the idea is you look at correlated assets. And so I'm going to start talking about digital asset treasury companies, that space which really, really, really has been hurt quite a bit this year. So in my specific situation, MSTR is not a tax loss candidate for me. I'm still up about 7x on that stock. So I can't really do that. But I consider some of the later month of December weakness of MSTR due to tax loss harvesting. I think some people, especially people who bought in the 300 or 400, they may be tempted to sell. They may be tempted to harvest some of that loss. And so what do you do? If you sell the stock, you harvest the loss. But let's say you still believe in Bitcoin treasury companies, you want to keep your exposure to the space, you want to keep correlation to the space. Well, the idea is to buy a different company, but that is, often somewhat compared to strategy is Metaplanet, right? ASST, I don't have a snapshot here of ASST, but ASST is another company that also has a preferred. Metaplanet has a preferred strategy. Strategy, of course, is the inventor of the preferred strategy, and we have ASST, who also has a preferred strategy. And you can see the MNAV. Well, I guess going from strategy to Metaplanet, that would not be very good in terms of MNAV because you would be paying up for Metaplanet. Metaplanet's MNAV, for some reason, has held up pretty well at 1.18. This is the basic MNAV, by the way, not the one strategy uses, not the one I use, but the one that is easiest to calculate, unfortunately. So most of us end up using basic MNAV because it's so much easier to calculate. You don't have to go through the filings of the company. But you can see, Mara, swapping strategy into Mara to keep the correlation. Why not, right? It's a similar correlation. There's one I like here. It's what's it called? Empiri Digital at a 0.51, and this company is clear of debt, totally unknown, totally forgotten. They were importing golf carts from Vietnam or something, and then they just stopped the business and just bought a bunch of Bitcoin, and they're just sitting on it, and it's trading at half the value of the Bitcoin. And of course, the idea is that eventually the market will come back to these senses. It will trade these stocks eventually will trade either at book value, and so hopefully at a positive book value. I think a first stop for these companies is to trade back at book value, and then a second stop is to trade probably at a book value similar to that of banks, which is 1.6 to 1.8. As someone rightly pointed out in the comment section, these should likely trade at a higher book value than banks, and I totally agree, but it sometimes can take a decade for the market to agree, right? Q in Tesla, Q in Amazon. The market did not agree on these stocks for a decade, right? So that's why you always got to be careful with options. You could also say, I'm going to sell and I'm going to buy options. Well, be careful with that because options have an expiration date. So anyways, another thing you could do if you want to have a correlation, of course, is just buy Bitcoin. If you buy Bitcoin, you're going to have a correlation, a very similar correlation. Keeping that exposure to Bitcoin for 30 days if you want to ever buy back, say MSTR, say you sell MSTR, you want to ever buy it back in 2 months, 3 months, whatever. If you buy Bitcoin, you keep that correlation. And another asset that I like is ETFs. So in this channel, I've talked about OwnB before, and OwnB has something like 12% of strategy. This one, from what I understand, from what I read a few days ago, 16 to 17% of MSTR is CRPT. That's the top holding. So you can also move to an ETF, and I think some people are going to be compelled to do that because we've had so much volatility in specific DATs this year that maybe 2026 you want to have less stress, and so you can have an ETF which is composed of Bitcoin ETFs as well as DATs as well as miners for more stability. So that's the DAT swaps, the DATs swaps. Let's talk about other things you could swap, right? So let's talk about stocks that have really made the year. These were the new story of the year. CoreWeave, Iron, and then to a lesser extent, Nebius, CleanSpark, and then I cover this one, but the internet seems to entirely hate this one, which is Mara. I'm the only one who likes Mara out there. I don't know. But the point is, you can see these stocks have been very much punished towards the end of the year. The market right now is going through a phase where it doesn't believe AI is a thing anymore. And so that's why I think a lot of the value in NVIDIA, a lot of the reason why NVIDIA is pretty much near all-time highs is because NVIDIA is in the index. The market has been buying the index, right? But specific names, hyper-growth names in AI, they've just been sold off, like insanity. Iron is down 50%, 50% from the peak. CoreWeave is down more than 50% from the peak. If you look at CleanSpark, we are way down from the peak. CleanSpark actually traded in the low 20s. We're now at 10. Mara, same, traded in the low 20s. We're now at 10. Nebius traded in the high 130s. We're now at 85. We're at 76 not too long ago. The market just has no idea how to value these, but you can clearly see that correlation. Let me show you the chart of like back to back. It's very much uncanny. If you look at Mara and CleanSpark, back to back, it's as if the market didn't look at the fundamentals at all. The market is just trading those as a basket. It's entirely ridiculous. The market ignores the fundamentals in the short term. Like even if you look at Nebius, look at the chart of Nebius. Like this is a highly correlated chart. To me, these stocks are way too cheap. But I believe if you have a big loss, it would make sense to just swap them, book the loss, and maybe if you like, I don't know, like one, you could say Iron versus Nebius. One could like Iron a little more than Nebius, but it may still make sense to do the swap to book the tax loss, especially if you bought Nebius at $80 or something like that, right? It would still make sense because these assets are trading over a short term in a correlated manner. And the only thing that you need to do to book that tax loss is to not be in the stock for 30 days. So I think it's interesting. I think correlated assets are interesting from that standpoint. Let's talk about ETH, right? So the big candidates for ETH, for swapping ETH is SBET and BMNR. BMNR is a little expensive from an MNAV basis, so be careful with that. But you can see the correlation there is so uncanny. It's so crazy. The correlation, I mean, this is essentially the same stock chart. And so, of course, if you have a big loss on the ETH treasury companies, that could be something you do. And a trade that I like, I like Solana better than ETH. I like Solana DAT companies better than ETH. They've been equally battered. It's been really bad. But you can see the chart is very similar. The chart is the same. You can see since the end of the year, nothing but a sell-off. And so I think it may make sense to swap between those two. DFDV is another candidate. You have Sol Strategies, the Canadian company as well. There's a few Sol DAT companies that you can swap in between. And today for Patreon, for example, I calculated UPEXI at 0.76 basic MNAV, Forward Industry 0.66 basic MNAV. So if you did a swap between, say, UPEXI and Forward, not only would you book the loss, but also you would be acquiring a cheaper bag of Sol, and you book the loss. So again, like I said, the secondary prize of 2025. I would have much better been making a video telling you, oh, there's nothing to tax loss harvest this year. Unfortunately, there is a lot to tax loss harvest this year. That's the secondary prize. And that's really the prize that's no good for the government. This is not a good thing for the government. The government wants stocks at all-time high on December 31st. Like, it really wants stocks. Like, if there's one point out of a year where the government should want the stocks at all-time high, it's December 31st, right? And then maybe the stocks can crash in March, and that's not going to make a difference. So anyways, next year could be entirely different. To me, there's no guarantee that we're going to get a lot of tax loss selling in April, for example. There won't be any tax loss selling from my portfolio. Any tax payment selling in April, there's going to be none of it from my portfolio. Maybe not from your portfolio either. I mean, this year has been no good for the government collecting taxes. The performance of the end of the year has been absolutely no good. And then lastly, we finish. I mean, even HIMS. What in the world? What did HIMS do? As I always say, what did HIMS do? Oh, it beat on Q3. It had an outstanding Q3, beat all expectations. The app is booming on the App Store. #1 app in its field, in its space, firing on all cylinders, and the market just doesn't care. And if you look at the end-of-year chart, I'm sorry, this is not exactly the same time frame here, but if you look at the end-of-year chart for LifeMD and HIMS, again, correlation has been uncanny, nothing but down. And I would even take it as far to say that this is something of the health sector, the health small cap. The market has been trading those as a basket. If you look at the way OSCR has traded compared to HIMS, again, the market makes absolutely no sense. It doesn't matter how many times HIMS tells you we're not just a GLP-1 company. It doesn't matter that HIMS sells liraglutide and metformin, which are no trademark. You're not selling, you're not selling a patent protected product. You're having a lot of growth from free molecules, from public domain molecules. Companies firing on all cylinders, and it's dropping entirely. But you know what? If you look at the sector as a whole, it's not better for the owner of Ozempic. It's not better for the owner of semaglutide, Novo Nordisk, which has just seen a similar end of year chart. Novo is a stock that was $150 for 3 years ago, 2 years and a half ago. I can't remember, but it was $150 not that long ago. Now it's trading at $50, and you have a stock that has unlocked India. You have a stock that is launching an oral Wegovy, a weight loss pill, highly effective, launching in the United States next year. The market just entirely ignores it. That's why doing options is such a risky proposition when you can't time the market, when the market can stay irrational for so long. So when I look at these health stocks, and I could have put other ones, like slower growth ones that I don't cover on the channel. Like I know a lot of people, for example, like Pfizer, United Health. United Health, I actually like perhaps a little better than a lot of companies out there. United Health is pretty good. All of these stocks we've just traded down. So you can use, if you have a big loss somewhere, there's something you can do about it, right? The suck-on prize, and such a bad end of year, the suck-on prize for the investor is swapping assets to generate losses. It makes a lot of sense to do that. It is in the tax code. It's entirely fine. Just buy a different asset. Just make sure you buy something different, something correlated, but something different. And if you do that, you avoid the wash sale rule, you're good. And I know it seems very counterintuitive to go in the trading app and to say, I'm going to try to look to sell something to make a loss. It looks very, very much counterintuitive. But in my view, that is a rational thing to do. And the weakness we've seen the past few days, the weakness we're seeing today in the market, that has a lot to do with that. You may not see that weakness in the indices, but you may see that weakness in individual stocks. And keep in mind, why do you not see that weakness in the indices? Because if the indices were to be down, for example, you could sell an S&P 500 and buy a total world or a total stock market index, right? Different. One of them owns 7,000 stocks, another one owns 500 stocks. Different indices, right? Different QSIP. And you could do that and keep that correlation. Keep in mind, when there's a crisis, correlation goes to 1. Unfortunately, so many of these riskier assets have a correlation, which is trending towards 1, which is very unfortunate. We didn't get a Christmas rally this year. We didn't get November. We didn't get October. We got nothing. We might get a much better 2026. At least that is my hope for all of us. And that's also my hope for the USA. I want to pay taxes. Let my stocks go up. I'll pay taxes so happily. Like this has been very unfortunate this end of year. Anyways, this was not investment advice. This is not financial advice. This is not tax advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon. Follow me on X. And most importantly, I know in some cultures people don't like to say it too early, but depending on where you are in the world, have a happy new year. Depending on how you watch this. Happy New Year. No investment advice. Thanks for watching. Have a wonderful day.